a management consulting company. And Natasha and I are here today, and we're going to discuss all things audit related. And I know it sounds like a dry topic, but I'm sure Natasha and I are going to make it absolutely exciting and amazing. And it is an important topic as we very rapidly move towards the pointy end of the tax year, where we are all very busy preparing our tax returns and end of financial year statements. Now, I don't know about you all, but I know I dread this time of year, even though every quarter we go through our receipts and dutifully submit our BAS statements. But I know my husband always says to me, I don't know why you always get grumpy about this time of year, because
you're definitely not alone in that getting grumpy. A lot of our clients feel exactly the same.
I know, and I always feel like I get stung by the ATO. Like I feel like the government's always taking money from me, and everyone in business says, well, that's a good thing. You should be grateful because it means you're doing well. But Natasha, I tell you what, it doesn't take the sting out of it.
It doesn't. And what we find is that's not an unusual comment that we hear from a lot of our clients, because they know they've got their quarterly BAS commitments, they've got their super commitments, and then to add to the top of that pile is they've then got their pay-as-you-go installments, which a lot of clients forget, which they have to pay. And then it comes in from the ATO and they're like, oh, that really hurts.
Absolutely. And you know, and then there's the whole audit side of things, right?
So there's the audit side of things, yes. Which, as you alluded to, it's not exactly the most fun topic to talk about, but it is so important to understand the audit side of things and where the tax office is looking and what they're trying to achieve, I guess.
Yeah, and I really feel that's why this is an important topic, and it's great to have you here today, because hopefully we can prepare those awesome people that have taken the time to listen to the Business Women Australia podcast and be prepared for tax time, and hopefully if they're subjected to an audit, they will know because of your very wise advice around how to proceed.
Yes, that is our aim for today.
Excellent. Now, before we get on to this very important topic, let me tell you a little bit about Natasha. So Natasha is a partner of LG Accounting Solutions. She's a chartered accountant. Now, I dated an accountant, and I know that going through your CA is a very arduous and slightly traumatic experience. But
it was not a fun time. I was very happy when I got that piece of paper.
I'm sure you were, and you probably got your life back as well.
Yes, exactly. That was one of the best parts of completing my chartered accountant's degree, was that it was over and done with, and now it's a beautiful certificate sitting on my wall.
Oh, classic. And you also have a degree in accounting and international business from Edith Cowan University. Natasha enjoys supporting business owners, inspiring success, and solving problems. There's something we've got in common. For over 18 years, she has worked as an accountant, giving people the tools they need to grow their businesses. And for the last 10 years, as a partner of running LG Accounting Solutions, Natasha has first-hand experience the challenges and opportunities of running a business. She is passionate about optimising her business and is also passionate about helping others optimise theirs. So thank you very much, Natasha, for taking time out of your busy day to join us here.
And thank you for that lovely introduction.
More than welcome. Now, before we get to the pointy end of audit, I just wanted to say, like all good podcasts, I did stalk you digitally, so you probably see my name pop up on LinkedIn as having looked at your profile. One of the facts that really interested me most about you is the fact that you have experience as a business owner yourself, and as such, you understand what us business owners and operators go through, and therefore it places you in a really unique and powerful position in that you can not only offer your professional advice as an accountant, but also your practical experience too, and I think that's really awesome.
Yeah, it's a really big part of actually being able to help our clients really well, is like running the practice here over the last 10 plus years, it's really given me a really good understanding of the issues that business owners face. And it is amazing that the issues that we face as accountants and running an accounting firm are exactly very similar issues to what our clients and other business owners experience. And as a business owner, you can feel very lonely in running a business because it's not the sort of things, if something's not going right, or you're subject to an audit, it's not something you really want to talk to your friends about. So being an accountant, being in business and understanding those issues is we're able to really help our clients to be able to solve their problems that they come across.
Absolutely, and it's such a great point because it is a lonely existence and those support networks aren't necessarily around. So fantastic. Now let's get to the pointy end of our podcast, shall we?
Yes.
Now, we know every year the ATO puts out advice on the priorities or its focus areas. And in the past, it's been on things like record keeping, related work expenses, rental property income and deductions, and of course capital gains. And with the rise of crypto, there's certainly been a lot of focus on that, as well as shares. And I recently read a PwC article stating that they've seen an increase in ATO reviews and audits focused on things like contractors, PAYG, which you earlier talked about, super guarantee, and there's certainly been a lot of high profile media around the good old super guarantee issue, as well as fringe benefit tax. So in your experience, what are you seeing the ATO currently targeting with their audits?
So our listeners might not be aware that the ATO has actually been given a lot more money from the government to actually undertake audits. So the audit division at the ATO has been bolstered in numbers and also in the amount of audits they can undertake. And a lot of the things we've seen them starting to focus on is old ATO debt. It's not necessarily an audit topic, but they are very much focusing on recouping their debts that they have out there with the community, which was put on hold due to COVID. But the main thing we've seen our clients getting audits for is super guarantee and not paying / lodging on time. And that's been a very hot area that they've been starting to target. And as you alluded to, they're still focusing on record keeping, work-related expenses. That is probably going to be a big one in the next year. In particular, people who have been working from home and claiming things that they may or may not, or they should or should not have been. That's really what they're starting to focus on, and they've really got the money and the resources to be able to, so to be able to start tackling these things, I guess you can say.
And so that's really interesting, and I suspect the whole workplace related expenses is one that's going to be quite ongoing. It seems to be a bit of a trend that the ATO seems to always add in terms of its priority or focus areas, and certainly with COVID, there's been a bit of leniency, shall we say, that governments both at state and federal level, and in particular the ATO, has certainly been a bit forgiving, shall we say.
They definitely have been, and I think their forgivingness is sort of coming a little bit to an end, and they're now going, well, we're turning back, we're now sort of coming out of COVID times and it's returning back to normality, and they're going, we're now starting to get that big audit stick out and going, hey, this doesn't look quite right. So here's, first of all, they send out letters just doing a bit of a fishing expedition to see what they can catch. And then they're now actually starting to tackle those fish that they've hooked on.
Right. And so why did the ATO target these specific areas, and what should people be mindful of?
So they target the specific areas where they believe the taxpayers in general, not necessarily everywhere, but in general, are rorting the system. So that's really where they're going. People are claiming more deductions or not paying their super when they should be. So they're doing something they shouldn't be doing in the tax officer's view. And that's why they're looking at those areas, because they believe that all taxpayers should be doing the right thing and abiding by their legislation they've written. And they're going, you guys really have not been. And obviously super guarantee and not paying super for your employees is a really hot issue, a hot topic. Super's been a lot in the media lately because of the changes to the super legislation. And they're going, well, the employees should not be missing out on their super.
Mm. And I think that point you said changes in superannuation legislation. I think that's one of the things that happens a lot in tax is that there's always changes in the rules and regulations to try and keep things contemporary and also
or to close the loophole that
yes.
some of the taxpayers have found. That's a really common thing.
Yeah, so it can be quite hard, I think, for people to keep on top of all these changes. And I heard in the news recently, and I'm sure other people that are listening to this did as well, where the government is giving some consideration to looking at changing the payment schedule from, looking at maybe changing it to fortnightly as an example and so on. So I think these things can be quite hard for business owners to keep on top of. And so I think it's really important, I think, to be having these sorts of conversations, particularly around this time. That's interesting.
I thought that was going to be my phone ringing. But it wasn't mine.
No, well, I hope that doesn't mean that I have to buy everyone a case of beer. Oh, classic. Anyway, there you go. So back to the topic at hand around audit. We know that the ATO focuses on ensuring that there is an appropriate level of scrutiny and correct reporting of deductions and income, and that's certainly something that you made comment on earlier, and that it targets problem areas where they see people making mistakes, either consciously or not consciously, because sometimes these things are genuine in terms of making our mistakes. And certainly around this time of year, some people see this as a bit of a nuisance, so they try and get through it as quickly as possible, and mistakes can certainly be made. And as such, I found it interesting that the ATO talks about satisfying 3 golden rules when it comes to claims. It says, firstly, you must have spent the money yourself and that you weren't reimbursed. If the expense is for a mix of income producing and private use, you can only claim the portion that is related to producing income. So I think a lot of times we see people go on trips somewhere and they try and tie in a bit of business. And the third one obviously being you must have a record to prove that you made the expense. So in this modern day and age of data, there's certainly been an increase in activity from the ATO on PAYG and SG, which is super guarantee audits, through data matching and analytics, and through random inquiry program. So the ATO is getting modern in terms of its...
Yes, so they're definitely starting to, and that's coming from them having more money to be able to expand and to be able to implement some of these more modern techniques that they're going through. So whereas before all the different government divisions didn't used to talk to each other, they didn't actually talk to Landgate, they didn't talk to the Department of Transport, they didn't talk to all these departments. They now actually all talk, which means that they're able to do a lot more data matching behind the scenes. So when they're going, hey, you've sold this property, they actually have proof that you've sold this property. And they're able to go, hey, you sold this property on this date for this amount. Why wasn't it in your tax return? So their audits can become quite pointed as well in relation to actually know something that you haven't disclosed in your tax return or that they were expecting to see in there.
And so these are the things that would trigger potentially an audit, Natasha?
Yes, definitely. They're definitely part of the things that would be triggering an audit. So they now undergo a pretty rigorous data matching process. So if they're matching up the data that they're expecting to see in your tax return and it's not there, you are at a higher chance now of having an audit, whereas back 5-10 years ago, you potentially wouldn't have been subject to an audit unless your file happened to stumble across someone's desk. Whereas now with technology, ATO is also utilising it, and they're now triggering audits for things that we didn't see a few years ago. And we are now getting that coming across our desks. The ATO is actually quite clever. We get what we call a pre-fill report from the tax office, and it basically is a report of everything the tax office knows about you for us to help prepare your tax return. And if we put something in your tax return that is different to the pre-fill report, we need to make sure that we've got really strong evidence and records around that. Otherwise, when the tax office does come knocking, and they will, we need to be able to prove why we're different and why we didn't agree with the tax office pre-fill report.
Great. And so what's involved in an audit?
So it depends on what you're getting audited for and what the letter or what the initial phone call is from the tax office that you get. So if we're undergoing an SGC audit, so super guarantee audit, i.e. the super hasn't been paid on time or lodged on time, then first point of call is the tax office basically will send a letter out to the business or to the individual and say, hey, this is outstanding and you need to start actioning it. And they give you a time frame of when you need to action the audit. Reply back to the tax office by.
Wow. Okay. So in doing research for this podcast, I read an article that stated, as the taxpayer, you are responsible for what is lodged in your return, not your accountant or tax agent. And I think this is a really important point, as some people get an accountant or tax agent essentially to outsource their tax requirements because they find it painful or a nuisance and they don't really want to be dealing with it. And so given this, who is liable for the findings of an audit?
So ultimately it is the taxpayer who is responsible for the findings of an audit. So when a accountant prepares a tax return for an individual or an entity, they actually get the clients to sign off on what we call an electronic declaration, which is, if you actually read the fine print in the electronic declaration that the client is signing, it actually says that they agree that what is in the tax return is true and correct, and they believe it is correct. So by signing that, there actually is an acknowledgement that the clients are signing, even though they may not realise what they're signing is. Yes, they're consenting to us to lodge the tax return electronically, but they're also consenting that the information put in the return by the accountant is actually true and correct.
Great. And so I think this is a really important point, because I think a lot of times when people are signing things, I'm not sure how many people actually read the fine print, Natasha.
That is so true. There is a lot of times where there is a lot of trust put into accountants, and it's a really special position to be in when you're actually being given all this trust by your clients. But if you've got the wrong accountant working as part of your team, then you can actually get yourself into a little bit of trouble. So making sure you've got that right accountant for you, who is trustworthy, knows what they're doing, actually has the best interests of you, of what you're doing, and explaining the risk. So if they've identified that you've got a discrepancy to your pre-fill report, for example, or you're selling a property but it's actually a main residence, or there's some reason why it's not included, that they've gone through that with you as part of preparing that tax return. And quite often we see that accountants aren't showing that extra level of care and concern for their clients, and that piece of the puzzle is missing, which is quite unfortunate.
I think that's a really good point, because a lot of the times I think we see this as being a task, the task
Correct.
of putting in your BAS, the task of putting in your tax return and your end of financial year statements, the task of putting together a P&L, for your annual reports. And I think you raise a really good point in terms of the relationship that you have to have with your accountant, which is so much more than just doing these very transactional components. And I think also that it can be really hard for people to know, well, what sort of relationship is appropriate for me to have with my accountant. Because we don't talk about these things.
No, it seems to be. And there's also this big illusion out there that it's really hard to move accountants. Whereas in reality, it is actually not that hard. It's scary, but it's actually not that hard. That if you're stuck in a relationship with an accountant that isn't working for you, then it's actually not that hard to move. And it's like this really big myth out there that it is hard to move, when it's really not.
That's interesting. And so how do you know if you've got a good accountant or not? Because that relationship is quite special, because we don't talk about our finances with people. We certainly, very impolite to raise it at the dinner table and talk to your friends and family about your financial situation. So that's the type of relationship you have with your accountant. So it's a very important one. How do you know if you've got a good one?
It's as you alluded to, that relationship with your accountant is very special. They know you intimately, financially intimately is probably how I would explain the relationship. We know what people are spending. We see all their bank statements. We see everything financially for a person. So that relationship is very important, and making sure you've got that right person in your corner. So you need to make sure that, for one, you get along well, that you feel like you're able to pick up the phone, have a conversation with them about things that make you really uncomfortable. Because if you don't feel comfortable enough to pick up the phone and go, hey, I'm having this issue, I've got this letter, I've got this going on and I need a hand, it's not gonna work. And it needs to be a relationship that isn't just a once a year activity. It shouldn't just be this task of, I've got to do my tax return, here's my stuff, and then they send it back. There should be a lot more happening in that client relationship. It really should be a relationship, not just a one term date sort of thing. But knowing you've got a good accountant in your corner is someone who's able to communicate at your level. So they're able to communicate with you in terms and in a way that you understand. And you should be able to feel comfortable in going back to them and asking them questions, even if they're silly questions. There really is no such thing as a silly question, because if it's a question to you, it's obviously important, it needs to be answered, and they shouldn't make you to be feeling silly of the fact that you need to ask it. So they should be someone who has got good communication, is really approachable and able to communicate at your level, but also acts proactively. So when it comes up to pay-as-you-go installment time, so that prepayment of tax that you need to make, they've communicated with you that, hey, this is coming up, you're going to need to pay it, you've got this amount of time, are you able to pay it, do you need an extension? And have that conversation and be able to proactively help you manage that cash flow, but also proactively manage the issues that are popping up in your businesses.
Yeah, I love that proactive component, because I think a lot of times business owners and operators are so focused on running the business, which is exactly where they should be focused. Yes. They shouldn't be focused on trying to deal with some of these other issues. Obviously, they need to be cognizant of them because there are certain ramifications if they provide false statements and so on. But having someone in your corner that is being proactive, getting ahead of the issues, and also having the conversation around, okay, well, it looks like you're on the trajectory of this amount of revenue. Have you thought of X,
exactly. Or you need to register for payroll tax because you've hit the threshold, or whether you're going to record on cash versus accruals because it's better for your cash flow. There's so many proactive things you can do in a business, making sure you've got your budget done, that you're sticking to it, that you're actually looking at your results, but looking at them not so far 12, 24 months down the track that they're actually basically worthless to look at because it's so historic numbers.
Yeah, fantastic. And in your spiel there, I had a couple of laughing moments, very much inappropriate comments in my head. Things like, intimate financial relationship. And I was thinking, yes, unless you're actually married to or dating someone who's an accountant.
Yes, that is true. But that is really, we actually do look at, we actually have access to your most intimate financial records. There's not many other people and professions that will know how much income you make, how much you're spending, how much your tax bill is, there's not many, and how much profit your businesses make. There's not many other professions that know that level of detail about you financially.
Yeah, and I love that whole, this isn't a one-date relationship. Fantastic.
Oh, it definitely should not be. Because if it is, it means you don't have that good relationship with your accountant. It means that you really are just there to get the task done, and you're not utilising the skill set of your accountant, well, especially if you've got the right one. You're not utilising the skill set of your accountant to help grow and improve your business.
Yeah, absolutely. And if we come back to auditing,
Oh yes, auditing.
Yeah, I know. We'll give the listeners a bit of a break from audit, talking about how your accountant should be in the corner for you and helping you succeed and grow your business. But back to auditing. Now, auditing does seem to be a bit full on. Like from what I've read, now touch wood, I've not been subjected to an audit, but in my role as an executive back in government, we certainly had to do internal audits, obviously, as part of our good governance. But an audit can be a bit full on, and I'm sure that it can cause a great deal of stress to people. I noticed that the ATO has an 18-page document, which I believe is short by ATO standards, called the Taxpayers Charter. Good old ATO language there. Taxpayers Charter, if you're subject to a review or audit. Now, Natasha, can you tell us, if one is lucky enough to be subjected to an audit, how does one survive an ATO audit?
That is a really, really good question, because surviving an ATO audit can be a little bit tricky and a little bit stressful, especially if you don't have the professional team around you to guide you through that process. So if you don't have that good relationship, I keep coming back to this relationship thing. If you don't have this good relationship with your accountant, it can be a really, really scary process, because when you get that audit letter from the tax office, it uses really official legal language, and you get it, and it does look like you've got this big slap over the wrist, and you're like, oh, and it is very daunting. But how do you survive? First of all, it comes back to probably your business practices that you have before you actually get audited. And that comes back to the very basics of having good accounting records, and making sure that you actually have everything kept up to date, that you've got them your records kept accurately, you're keeping the supporting evidence that is listed definitely in that tax office charter. Making sure that you've got those professionals around you, a good bookkeeper if you aren't very good at bookkeeping, making sure you've got a bookkeeper who is bookkeeping to the ATO standards that is needed, having that really good accountant in your team that is working with you, and making sure that you definitely hit those ATO deadlines that are coming in. So lodging your BASs on time, lodging your income tax returns on time, paying your debts as they fall due. So that's sort of how to survive an audit. Pre-audit is making sure that you've got those good foundations there. But surviving an audit, if you've got the foundations there, will be relatively easy, because the onus of proof is on the taxpayer. So if you've got good records, you're going to be able to pull up your records and go, hey, here you go, here's all my documentation, and find it really easily. Whereas if you don't have good records, the onus of proof is on the taxpayer, and they're required to find all the evidence that the tax office needs and wants. And they can go back up to 2 years or 4 years, depending on the type of business that you are. But if they're suspecting fraud or something a little bit more untoward, they can go back basically indefinitely. So they can go back as far back as what they would like, as far back as they suspect this activity happening. So having good records and being able to keep them, be able to access them easily is so important.
So what I'm hearing is, don't keep your receipts in a shoebox.
Yeah, don't keep your receipts in a shoebox. Technology has come such a long way that you're able to just take got apps, you can take photos on your phone and it syncs up to your software. There's so many products available to actually help you with your record keeping now. Don't keep it in a shoebox.
And those receipts fade as well. Like, I don't know.
They do. Yeah. And because the onus of proof is on the taxpayer, if you pull out just a faded receipt and it's faded, that you've then got to go try and prove it in another method. And if we're talking back 3-4 years time, so back in the past, the business that you've had that receipt from probably won't exist. They probably don't have the records. So it can be very challenging then to actually find it. Whereas if you've taken that photo on your app and it's sunk up to your software and it's already connected up, your record's there and ready to roll.
Fantastic. And what should someone expect if they are audited, and what's the process of an audit? So we've talked about surviving an ATO audit, but you talked about the letter, you talked about obviously submitting your records for that audit, what else should people be knowing about an ATO audit?
So it really comes back to how much proof. So depending on what the initial request is from the tax office and what they're wanting, it then depends on what you're able to provide back as evidence. So once you've submitted back your evidence to the tax office, so you've basically put your claim in there, you will then you then have to basically wait for them to review that documentation. And from there, the ATO may be satisfied that, yep, you've done all the right things and tick it off, and that could be the end of it. But if they're coming back and documentation is missing, or you actually have done something wrong, or you haven't lodged or paid something on time, and they then could come back. So there's one of two ways that then will go. They'll come back and ask for further information and further questions to do further investigation, or they will at that point issue fines and penalties and or a reassessment of your tax return or the case, depending on what it is. So if you've got enough evidence to basically knock it on the head because you have done the right thing but have just been unlucky enough to not hit an industry benchmark or not to be tied up in an audit, then that's really great. But if you don't, then you're basically at the mercy of the ATO on where they want to take their audit. And the person that is assessing your audit, it's really recommended to be polite, courteous, and be lodging everything on time and being in strong communication with the tax office during that audit process. And if you're not going to hit a deadline, communicating that early with your explanations of why, because at the end of the day, they're people too, and they're generally pretty good at things. But if you're going in there all guns blazing and start attacking them off the bat, they kind of put their defences up and aren't as respectful back to you because you haven't shown the respect to them to start with.
I think that's a really great point. They're just doing their job. And even though we talk about the nuisance that tax is and how we'd all prefer to pay less tax, the reality is that tax is an important part of our society in terms of being able to pay for things that we use in terms of services. That money gets used to help create the society in which we live in terms of public safety, like police, fire and emergency services, education, our hospital systems. So it really does play an important role. And so Sorry, you go.
Did you know at the back of when you get assessed of your notice of assessment, so once you lodge your tax return, the issue as an individual, the ATO issues you back what they call a notice of assessment. At the back of the notice of assessment, it does give a little bit of a breakdown of where your tax is going towards. So exactly that. It actually gives a little bit of a breakdown of where tax is actually spent. It's actually as an accountant, it's quite an interesting read to actually have a read of where the tax office spends, where our tax money goes towards, but it's very interesting to see where they're spending.
We know that accountants like a good graph, Natasha.
We do, and it has pretty pictures as well as some numbers there as well. So it definitely covers both new people who like a pretty picture, but also has some numbers there as well.
Yeah, got to communicate in different ways to people, don't we?
You do, you definitely do.
So I guess the question then is it better to be a parking inspector or a tax person?
Oh, I don't know. I think I'd actually rather be a tax inspector because I think parking inspectors cop a lot more abuse than tax employees.
I think you might be right, but either way, they are just doing their jobs, aren't they? And they are
That's exactly it. At the end of the day, they're doing their job and they're people. And if they're treated with respect and courtesy, how you would expect to be treated as doing your job, the audit process does flow a lot smoother. And yeah, it really comes back to just common courtesy.
Yeah, and demonstrating that you're not hiding anything. So I think that if people are a little bit bristly, then that probably raises some suspicion around, well, what are they hiding? They're not being cooperative.
Yeah, that is exactly it. And the worst thing you can do is if you get an ATO audit letter is just put your head in the sand. That is the absolute worst thing you can do. And I have seen it happen. They'll get a letter and the clients will get a letter and they tell us like after 2 weeks or a week after the date that the audit like you needed to respond by had come through. And it's like, why didn't you tell us earlier? We can work, we can actually get through this. It actually it is daunting, but it's not too bad a process as long as you follow the process.
Yeah, and I think you're right. Like, there's definitely different responses, isn't there? Some people do put their head in the sand. Some people have to go through this circular process of, panic and stress before they actually come out and action something. And then there's those people that are like, right, audit, let's get on to our
let's get on with this and get it done. But the main thing is that if you have, when you lodge your tax return, is having had that conversation with your accountant, knowing what the risks are in your affairs, you then, if you do get an audit letter, it really should not really come as a big shock, if that makes sense, because you should have already had that conversation going, I've done this, it's a little bit in the grey area, or this is a little bit risky, or hey, when you've lodged a tax return, you haven't, your business doesn't sit within ATO benchmarks, you are going to get flagged for an audit. It really then should not come as a surprise.
Absolutely. And you talked earlier about how far the ATO can go back with their audits. So you talked about 2 years, 4 years, and indefinitely, depending on the scenario. Is it common for them to start in like a specific year? Like, is it common for them to start, the year that you've submitted or the year before? Or do they, is there a certain pattern?
There is a little bit of a pattern. So we're currently in the 2023 financial year. That's the year we're in. So the ATO, we work basically a year behind. So we're lodging at the moment, preparing and lodging the 2022 work, and the audits that we're seeing come through for income tax purposes is for the 2021 year. So they are a little bit behind because we're still working on 22 work. We've got until the 15th of May / 6th of June, depending on extension times. So we're still working on 22, but they're looking at 21. But for a super guarantee audit or a pay-as-you-go withholding audit, they happen a bit quicker because obviously those dates pass. So we're actually seeing 2022 and some early 23, so quarter 1, quarter 2, 2023 audits coming through for super and pay-as-you-go withholding already.
Okay, that's really good for people to know, because I think sometimes we think that it's just the year that we've submitted. So I think that's a really good answer to that question, and it's certainly something that I didn't know. So I think that other people...
It's probably good to point out that the audit clock, so that 2 year, 4 year, that time frame starts actually from the date you lodge your tax return.
Right.
So if you're late at lodging, it doesn't mean you've foregone your 2 years because you have prepared that window has passed, like it's already 2 years old. It actually goes from the date you lodge your tax return, or lodge that document. So if you're lodging it today, that is the date the audit period actually starts from. It starts from today, not the due date of the document or return.
That is such a fantastic point, Natasha, because I think some people would not have known that, and so don't think it's a strategy
Exactly, and it's definitely not a strategy to lodge late, because all it does is you're still in that audit period because it goes from the lodgement date. The other thing to point out, that if you are not lodging a return, so if you lodge what they would call a return not necessary, i.e. not required to lodge a tax return, but you still have a tax file number, so that we call that a return not necessary, that actually doesn't issue a notice of assessment, which means it actually doesn't start the audit clock as such. So if you lodge a return not necessary, you actually are still open indefinitely to actually be audited during that period. So the recommendation is, if you have a nil return, instead of lodging a return not necessary, is actually to lodge a nil return. So you generate that notice of assessment and you do start that audit clock from that date. Otherwise, you're just opening yourself up back to get audited in the future.
That's a great point. And certainly keep all your records, because even though it's a nil return, as you rightly say, you may still be subject to audit, and definitely keep those records. How long should people keep their records for, Natasha?
So they say that you should be keeping your records for 7 years, which does seem like a long time, but that is 7 years from the date of lodgement of your tax return. So not the date, the financial year it's in, it's from the date of lodgement that you need to keep your returns for and your supporting documents. But if you have an asset purchase, then you need to keep that asset purchase documents for 7 years after the sale of your asset. So if you purchase, for example, a property, you need to keep that contract of sale and the settlement statement until 7 years after you've sold the property.
Great.
So it's 7 years, but there's other little few exceptions to that.
Yeah, and so that's a really great point, because during COVID, there was the instant asset write-off.
Yes.
So I think people should be really conscious of that, because a lot of people went out and bought assets like cars, computers, printers, and so on. So I think it's a really great point, Natasha.
So even though in that example, even if an asset has been written off for tax purposes, but you still own it, you still need to keep those documents of purchase for 7 years after sale. So yeah, keeping those documents in a safe spot is really important. So now with things being electronically saved, which the tax office does accept electronic records, which is great. We don't have all these paper boxes. It's recommended to have like a Dropbox or a Google or some sort of OneDrive, one sort of system where you have like a capital folder saved, and you just keep all your capital items in there, so that if you do need to get them back for whatever reason, you're able to easily access them.
And great way to share that information with your accountant as well.
Yes.
Yeah, because of that
intimate where we want a shoebox coming into our office.
Multiple shoeboxes on a trolley.
Oh, yes. When I first started as an accountant, it was quite common for a client to rock up with a couple of shoeboxes and a paper cash book written out by hand, added up by hand. It was, very rare that we see them nowadays. But back when I started nearly 20 years ago, that was common. It was very uncommon to get an electronic cash book. Now it's flipped over. It's sort of, if we don't get an electronic cash book, we kind of go, wow, what is this?
You go, how old is this person?
Yes.
Oh, classic. And I also read that around 2 million people a year get audited by the ATO.
Yeah, it's quite a large number.
Yeah, that surprised me. And obviously Australia has about 25 million, but 2 million is still quite a big number. What steps can people's businesses take to avoid being an audit target?
So there's a number of steps that they can take to avoid having an audit. So it really comes back to, again, record keeping. There's some common themes in this podcast, is making sure that you have good records kept. So obviously that is just should be common business practice anyway, but making sure that you have everything lodged and paid to the tax office on time. That is probably one of the key things. Making sure that you meet your obligations on time. And also, but the main thing is that the ATO looks at benchmarks. So they have all the industries benchmarked across those. That data is available from the tax office. And if your business is outside of those benchmarks, is probably looking at why you're outside of those benchmarks and trying to then improve your business so you fall in to be a better business, I guess you would say. But the main thing is that if you're outside of those ATO benchmarks, then you really will be prepared to have an audit, because that is one of the key criteria they look at when they're assessing people for audit.
Yeah, fantastic. And so if you are unfortunate enough to be subject to an ATO audit, other than providing the material evidence for your income and deductions, I'm sure there's going to be some cost involved. What are the costs of an audit?
Again, it comes back a little bit to depending on what they're auditing, but the cost involved comes back to potentially whether you need to engage an accountant to be able to prepare that information that is needed. So Some audits require extra forms to be completed or documents to be drafted. So there obviously is a time cost involved for your accountant to get involved in that. Other times you might actually need some legal opinions and some legal advice or some special tax counsel advice, because there is very specific things they're looking at or specific circumstance in your business that need to cover off. So it can add up to be very expensive to have a tax audit, depending on how well your business is sort of prepared, I guess, to have an audit. But it can add up very quickly if your business doesn't have the records, the information to be able to provide back for an audit.
Great. So that's a really great political answer there, Natasha. It depends.
It depends. Very diplomatic. It depends. Well, what businesses can do to protect themselves is a lot of accounting firms offer through insurance providers what they call audit insurance. So this is not a sales pitch. It is a legitimate product that is out there on the market, and they can pay for audit protection insurance, which is basically if you are subject to an audit, the insurance, like a normal insurance, it covers you for a capped amount of fees, which can then cover off. So it can be a way to help minimize the cost to businesses to help get through that audit. So if someone is sort of in an audit in an industry that is getting targeted by the tax office or is outside of benchmarks, and they kind of know, oh yeah, we're probably going to be a flag to the tax office, they can look at having some audit protection insurance from a reputable provider to be able to help absorb and cover those costs.
Fantastic. And you said something there just then, an industry that is a focus of the ATO in auditing. Do you find that the ATO does tend to focus on specific industries?
They do go through runs where they focus on different industries at different times, depending on what their focus is on. So in the past, they have spent a lot of time focusing on cash businesses. That has been one of their favourites for a long time, is cash businesses. And if you're running a cash business, that seems to be one of their favourite industries to not an industry, but kind of a very generic business to be auditing. But yeah, they do go through runs where they target specific industries.
Great. And then we have seen the ATO, as we talked about before, relax some of its activity during COVID and post-COVID. However, now that we've moved into the new normal, whatever that means, they're obviously turning up their activity and turning their mind to employer obligations, which is a very important part of running a business. And we've seen an increased activity in identifying non-compliance for audits, data matching to single touch payroll, and obviously the whole SG component side of things. So given this, what can people do to get their business ready for the end of the financial year? It's coming up fast, Natasha. We're pretty much
coming up exceptionally fast this year.
Yes.
So again, the first thing a business can do to prepare for the end of the financial year is having your records up to date and accurate, with the supporting document attached, ideally to your file, your cash book. There is a lot of software out there today that helps with that process, so it isn't as big a burden as what it used to be. It's a lot of it's now very much automated. Making sure that employer obligations are met, like you've alluded to, SGC, super guarantees paid, pay-as-you-go withholdings paid, all your personal income taxes are paid, and making sure that undertake some sort of what we call tax planning for your business. So look at ways to legitimately minimize your tax for the financial year for your business, and having that conversation with your accountant about how you can legitimately, and I'm saying legitimately, minimize your tax payable. So we're not talking tax avoidance, we're just talking ways you may be able to minimize your tax payable for the year. And then the other thing that should be happening leading into the end of the financial year is preparing your cash flow budget ready for next financial year, so that when the 1st of July rolls over, you have a really good plan for next financial year and how you believe the business will run from a cash perspective and a profit perspective for next year.
That's great advice, Natasha. And I'm sure that you probably find that a lot of businesses leave a bit of, potential claims on the table, maybe because they don't know that they could have claimed something. Maybe they're just rushing and they're just so excited about getting something back from the tax man that, because they want to pay for their next trip, or vacation somewhere, that sometimes there's potential tax money left on the table or tax return dollars that they haven't necessarily claimed. What's your advice there, and what are some of the common things that you see?
So one of the common things we see is people trying to implement a tax planning minimisation strategy after the 30th of June, which doesn't work. All tax planning strategies have to be implemented and completed pre-30th of June, otherwise they fall into the next financial year. So that's one of the big traps that we have. Or they undertake tax planning too late, which means they don't have enough time to implement their strategies. So making sure that they talk with their accountant and their team early. So sort of about this time of the year. So we're in April now, or late April. So talking in late April, May for tax planning, looking at the strategies they can use to minimise their tax. But the main things is looking at like paying super and making sure that money actually hits the employee's super fund bank account. So paying your super on time and potentially early to bring forward that tax deduction. In this current financial year, we still have the instant asset write-off. So looking at whether there's some legitimate assets that the business needs and cash flow provides that they maybe look at purchasing. Looking at stock take and writing off potentially obsolete stock if it's that type of business, and just some general purchasing opportunities that could be in the business, depending on the type of business as well. So there's definitely a fair few strategies that we look at with our clients to help get them prepared for the end of the financial year. And it's not a one size fits all. It's not like this strategy fits every business. It's like sometimes they're a combination and sometimes there isn't really a lot we can do, but a little bit of tweaking.
Absolutely. And I think that that's a really important point, is that this is all bespoke to what your business is, the type of expenditure, the type of revenue you generate, and also what your assets are. So I think that's a really important point, Tash. And I guess where you are also in that business life cycle as well. So
exactly.
Starting up a business will be very different to being a mature business, which is very different to exiting a business.
Correct. It is very true. And a lot of it also comes back to cash flow of the business. So some businesses at this time of the year, for whatever reason, are a little bit cash strapped. So it makes implementing some of those strategies a little bit harder. But at the same time, if we're looking at a cash strapped business, we'll be looking at how we can actually start getting cash back into that business. So the strategies become a little bit different. It might not necessarily be just a tax planning focus. It will be, how do we actually improve this business and get it to a position where the business owners are happy.
Great. And that's the difference, I guess, going back to having a great accountant and one that is transactional for you in terms of just doing your returns.
That is exactly it. I've got a meeting with a potential client tomorrow and they rang me and they're like, all these things keep happening and I only hear from my accountant once a year. And I'm like, oh, that's definitely not good. Like, you really should be hearing from them more. But it's very hard to I don't like to speak ill of my fellow accountants out there, but there is a fair few accountants out there that really should be learning how to actually offer a full service to their clients.
Great. And so what should one's accountant be doing for them and their business? It's a great segue into that question.
It definitely is. There is really a lot of things your accountant should be doing for you in your business. One is they really should be looking after the needs of you and your business and helping give that proactive advice. I keep harping on about this proactive advice. The relationship should really definitely not be just a once a year prepare your financial statements and your tax returns relationship, because if it is, you're really not getting very good value from your accountant. You're definitely not. But they definitely should be able to help you with making sure your accounting, your bookkeeping is done and being done efficiently. There's so much technology out there which your accountant has that knowledge of how to actually do it more efficiently. There's so many tips and tricks that they should be sharing with their clients. So yeah, making sure their records are kept up to date, good bookkeeping, using technology efficiently, having that proactive conversation around cash flow and helping them with cash strategies to get more cash into their business, looking at the systems and procedures of how they run their business from an operational point of view to help grow that business. So there definitely is so much more. I could talk about it nearly all day.
That's okay. Who knew there was so much to talk about?
That's it. I really didn't think we'd get through nearly a full hour, to be honest.
Yeah, well, to our listeners out there, Natasha and I did have an earlier conversation, and it went something along the lines of, can we fill an hour talking about tax and audit? Well, we can definitely say with a great deal of certainty, yes, we can.
Yes, we can.
And we didn't even pull out the Benjamin Franklin, quote around, there are two things in life that are certain, death and taxes. But we have just now.
That is very true. And I don't think we actually got through all the questions either, which is actually probably a good thing.
Classic. But I think one of your critical points is really around that proactiveness.
Yes.
And I know sometimes, certainly it's been my experience with accountants in the past, that I'm certainly not a tax expert, but I've had to ask lots of questions of my tax accountant in order to get the most out of them. So there's that lack of proactiveness around what you're talking about in terms of, here's where you're at, here's where you're going, these are the things that you need to give due consideration to. And so I think that finding someone like that, particularly as a business owner, when you're focused on growing the business, on dealing with some of the challenges that your business has, and let's face it, at the moment,
always a lot.
Yes, absolutely. We're certainly living in a very challenged and changing world, and operating a business in this new context, there's a lot for business owners to be focused on. And if you can have a really great relationship, as you describe it, Natasha, the intimate financial relationship with a good accountant, I think is quite critical, because that would be the support that is needed for sure to help businesses get through this very different context in which they're operating.
And that is so true. You have to have that really strong relationship, because I got into accounting because I loved the numbers and I loved helping people, but I didn't realize I'm really in the relationship game. I'm really here to have a strong relationship with my clients, so that we can help them. Without that relationship, it just doesn't work.
Absolutely. It's all about generating value for your customers, and that's how you know you've got a great business model and a successful one. So we've covered a lot in our hour together. We're still really shocked about this. But before we leave, firstly, I wanted to thank you for your time today, Natasha, in discussing this very important topic. It's one that we usually groan about, bury our heads in the sand, or dutifully action because we have to. However, I think you've really covered why it's important, and how, as business owners, it's something that we are required to do, and how we can do that efficiently, reduce the prospect of an audit, so that we can focus on doing what we're meant to be doing, which is delivering business outcomes for our clients.
That is so true.
So for me, the one thing that I've learned being a business owner is the importance of being organised and keeping a record of income and deductions throughout the year. As an accounting professional, what's the one thing you want our listeners to walk away with?
I think the main point is, well, I've got two. One is, from an audit perspective, is having good records. That is, if I'm talking from an audit perspective, is the importance of records is just so important. It is a very boring topic to talk about, but records is so important. But I think the one key takeaway is making sure that you've got the right person working as part of your team as your accountant. There is a lot of different accountants and styles of accountants out there, and really to shop around as you would with a relationship is you really need to make sure you've got that right person in your corner to help you with your business.
Team, I love it. I think people don't think about that, but I think that's a great point. The right accountant as part of your team.
Yeah.
So thank you to our listeners for joining us today. I hope you found a little nugget of wisdom in today's session. Thank you very much, Natasha, for sharing so many great insights. It's been an absolute delight, and I've certainly learned a lot from you today. And thank you to our BWA people for organising this important podcast for everyone, especially as we all gear up for that time of year, tax time. And on that note, may you all have a little sparkle in your day, and see you next time. Bye.
Bye.